We made it to 2021. 2020 was a historic year in so many ways. It brought a lot of challenges for people around the world. For stock market traders, though, it meant a lot of opportunity. We had a major market crash in March. Then it shot up to record highs several months later. If you caught any of the action, you likely had a killer trading year. It's the beginning of a whole new year. So what are my top stocks to watch in January 2021? In this video, we'll tell you about 7 stocks to watch right now. Number 7, Apple Inc., NASDAQ AAPL. Apple is one of my favorite stocks, and I think the company is the best in the world. The world's becoming increasingly mobile, and Apple has set the gold standard. For the longest time, we were looking forward to the iPhone 5G rollout, which happened in October, but the pandemic took over all the headlines. As we see more 5G capabilities become available, I think everyone will get 5G envy. I only have the iPhone 11. But when the 5G switch happens, I know I'll have to get one. I don't think I'm alone there either. When Apple sales numbers come out soon, we'll probably see explosive growth. AAPL is near 52-week high, and I see little downside, so I'll be watching it in January. Barron sees Apple as a top pick for 2021. According to it, Apple's product portfolio is the main reason to be bullish. The iPhone 12 is cited as usual. Barron's mentions that Apple should increase production by 30% in the first half of the coming year. Number 6, Expedia Group Inc., NASDAQ EXPE. One of the best recovery stocks over the past 6 months has been Expedia. In early 2020, the online travel agency stock was hit hard by the COVID-19 pandemic. The company is also in the midst of a huge bottom-up retooling, with a new CEO cutting costs and replatforming the company's technology infrastructure. I was really surprised to see this travel stock on my breakout scan. I used to do a lot of traveling before the pandemic. But in this new world, I haven't traveled anywhere since June. The stock hit a low in March when it was in the 40s. I definitely didn't expect it to be here, near $140. If this stock is this strong and preparing for a breakout while getting pounded by the pandemic, I believe it could do even better when travel restrictions lift and businesses reopen. It's a super bullish sign, and EXPE is on my watch list. Travel may be one of the hardest hit industries during the pandemic, but it will eventually return and hit new highs, according to my experts. Many travel stocks are already on their way up, despite significant business declines this year due to investor confidence and the news of successful COVID-19 vaccines. Number 5, GameStop Corporation, New York Stock Exchange, GME. I've been talking about gaming since September, and my idea is still intact. I think professional sports really messed up. To me, they missed an opportunity to gain market share during the pandemic by focusing on politics when people were trying to get away from it. It's been a wild year for GameStop, probably the most eventful in the 3 years I've been following it. When comparing the company in 2017 to the company now, there are many differences, but also many similarities. One thing that hasn't changed is the bears continue to compare GameStop to Blockbuster and remain steadfast in their belief that the fall of physical media will be the company's demise. Gaming companies have been flourishing as people stopped watching sports and switched to gaming and sports. Even GameStop has gotten new life. I mean, this company was on the way out before the pandemic, but its stock is at 3-year highs. A big hedge fund saw the opportunity and bought into GameStop. So know what I always say, follow the smart money. I got my eye on GME. Number 4, Luminar Technologies, Inc., NASDAQ LAZR. LAZR is a recent stock in the LiDAR space. If you don't know what LiDAR is, it's a method that uses laser lights and sensors to measure distances, and it could be a key technology for self-driving cars. LAZR gapped up big in its early December market debut, but then got slammed back down. Now it's grinding back up and might break out over the $38 level. If it does that, I wouldn't be surprised if it goes to all-time highs in the 48s. There's a rumor that people have spotted a Luminar Technology box on a Tesla car recently. If that's true, it could be a big boost for the stock. If it's not, plenty of other car companies will need LiDAR technology. I see a lot of opportunity for LAZR. Number 3, Shopify. If you invested $10,000 in Shopify, SHOP, $1,092.40, when it went public in May 2015 at $17 per share, you would have had almost $670,000 by the end of 2020. The company's e-commerce platform has been front and center during the pandemic as companies of all sizes have rushed to get their products and services online. Naturally, Shopify's business has gone through the roof as a result. The company's third quarter results were impressive by every metric. Total revenues grew by 96% to $767 million, with its subscription solution sales, monthly fees paid to use its platform, up 48% to $245 million. Its merchant solutions revenue, which is the sales it shares for transactions done through its platform, rose by 132% to $522 million. For the first 9 months of 2020, Shopify's subscription solutions revenue grew by 37% to $629 million, while merchant solution sales rose by a whopping 115% on the back of a 94% jump in gross merchandise volume, GMV, to $78.4 billion. One area to keep an eye on in 2021 is Shopify Capital, its lending business. It provides cash advances and short-term loans to users of its platform. Shopify advances a certain amount of money, and the merchant then repays a set percentage of their daily sales until repaid in full. In the third quarter, Shopify merchants from the U.S., U.K., and Canada got $252.1 million in refunds, 79% higher than in the same period a year earlier. Since its launch in April 2016, it has advanced $1.4 billion in Shopify merchants. Approximately $248 million was outstanding at the end of September. While Shopify expects many of its advances in the near term will be for COVID-19 assistance rather than growth, it ultimately will reap the rewards of operating this kind of business in an expansionary environment. Number 2, Netflix. Netflix, NFLX, $522.86, had another spectacular year in the markets, ripping off a 67% run in 2020, well more than 3 times the total return of the S&P 500. The pandemic was good for video streaming services broadly, though it should be pointed out that Netflix only added 2.2 million new paid subscribers in the third quarter 2020. Its lowest number since 2016. But don't lose sight of the fact that Netflix expects to add 6 million new paid subscribers in 2020's final quarter, bringing its total over 200 million for the first time in its history. From a free cash flow perspective, the third quarter was a significant success. In quarter 3 2019, it used $551 million in free cash flow. This year, it was positive to the tune of $1.15 billion. In the trailing 12 months ended September 30th, it had free cash flow of $650 million, putting it in a position to finish the year with positive free cash flow for the first time in years. Based on its forecast for operating income, $885 million, and total subscribers, 201.15 million in the fourth quarter, Netflix will finish fiscal 2020 with $22.45 in operating income per subscriber, up from $15.58 in operating income per in 2019. Despite increased competition in 2020 from Disney, DIS, Apple, AAPL, and many others, Netflix remains the gold standard thanks to shows such as The Queen's Gambit, which has become its most popular limited scripted series, with 62 million households watching the show in the first 28 days on the streaming service. CEO Reed Hastings continues to have plenty of ideas to keep Netflix among the best growth stocks in 2021 and beyond. Number 1, Amazon.com. Amazon.com, AMZN, $3,186.63. CEO Jeff Bezos will have a difficult time matching his 2020 increase in wealth. Over the past year, Bezos saw his net worth increase by roughly $75 billion thanks to his company's stock performance. Despite spending $4 billion in 2020 to keep its warehouse employees safe, combined with the fact that Amazon had to hire almost 430,000 people since March to keep up with the increased demand on online shopping, profits and sales went through the roof. During 2020's first 9 months, Amazon sales jumped 35% to $260.5 billion, filtering down to a $14.1 billion profit, 70% higher than in the year-ago period. Free cash flow, which enables AMZN to continue investing in the future, was $29.5 billion for the trailing 12 months ended September 30th. That's 26% higher than a year earlier. And remember, that takes into account the $4 billion Amazon spent on COVID-19 safety measures. Going into 2021, investors should watch what Amazon is doing on the healthcare front, though admittedly, its path ahead isn't quite what many expected. Haven, the once exciting healthcare joint venture among Amazon, J.P. Morgan Chase, JPM, and Berkshire Hathaway, BRKB, is reportedly disbanding to start the new year. But there are reports that Amazon intends to expand its Amazon Care health service beyond its employees to other large companies looking to provide virtual health care. Amazon Care offers a convenient way to connect to a clinician to access health care services without an appointment, or to access care when you have an urgent medical need, states the Amazon Care website. Afterwards, Care medical clinicians will post a care summary to the app with information about your diagnosis and any prescriptions or follow-up actions you should take, which will help you update your other doctors. Meanwhile, in November, Amazon launched Amazon Pharmacy, which offers home delivery of prescription medications. That could begin making a dent in the industry as soon as this year. As long as Amazon continues to find new ways to generate revenue beyond its traditional e-commerce platform, it remains one of the best growth stocks you can buy. That's it for today. Do let us know in the comments which stock you are thinking to buy. Please subscribe to The Stock Advisor. Thanks for watching.